Hey everyone. In this video, we're going to go over Netflix's Q2 earnings report for 2021. It just came out, and we're also going to go over how I believe that Netflix will be a $4,000 stock in the year 2030. Before we get started, smash the like button. Let's get going. So the first thing we're going to look at is Q2 revenue. Revenue increased 19% year over year to $7.342 billion. In Q2 of 2020, they did $6.148 billion, and that was a 24.9% increase year over year compared to 2019, and revenue has consistently been increasing. The next thing we're going to go over is that the revenue growth was driven by an 11% increase in the average paid streaming membership and 8% growth in the average revenue per membership. So they define ARM, as average revenue per membership, and they're saying that it rose 4% excluding a foreign exchange impact. So the important thing is that revenue is growing not only because there are more subscribers, but because Netflix is able to make more money per subscriber. And subscribers grew by 1.5 million in Q2. So Q2 ended with 209 million paid subscribers, and their original guidance was to add 1 million subscribers in Q2, but they beat that guidance and they actually got 1.5 million, so a 50% increase compared to the original guidance given. Looking at this chart, this shows weekly global paid net adds year to date, and this is showing all the years from 2017, 2018, 2019, 2020, and 2021. So as we can see, 2021 is actually having less subscribers per week joining in comparison to the past years, but that's because there was such a pull forward in 2020. So many people joined Netflix that it's obvious that in 2021 we're going to have a little bit less. But if you average 2020 and 2021, subscriber growth is as expected. Management also believes subscriber growth in the second half of 2021 will be greater than the first half because a lot of that pull forward will be basically finished with. So for a forecast of Q3, the management is expecting 3.5 million additional subscribers. So they write, we continue to target 20% operating margin for the full year in 2021 versus 18% in 2020. And after a big global launch in 2016, they committed to steadily grow their operating margin by 3% a year when you're looking at it at a multi-year time horizon. They also know that if they achieve their margin target this year, then they will have quintupled their operating margin in the last 5 years, greatly beating the 3% increase that they originally planned and that they continue to plan for now. In this chart, we see as they've been scaling and having more subscribers, we can see that 3% on average operating margin increase year over year has been playing out. In 2016, their operating margin was only 4.3%. In 2021, it's targeted at about 20%, with a big jump in 2020. And their operating profit margin as far as dollars is increasing. They've dramatically increased it actually. So it was about $100 million per quarter in 2016 to as much as $2 billion a quarter so far in about 2021. And they believe that their operating margin and their profits will continue to grow as long as they provide a great service. As far as originals are concerned, they've been having a lot of success. They show that in the numbers. So, for example, Zack Snyder's Army of the Dead had 75 million members watch it. Fatherhood, a Kevin Hart original they did, had 74 million members, and they've had already 129 Emmy nominations. Then they get into the video games. We all saw some recent news about video games and their recent hire. And basically, their idea is they're going to start with mobile games. They're going to use Netflix intellectual property, so they're going to expand their IP, and they're going to include the Netflix gaming stuff in the original Netflix subscription. So they're not going to charge as a separate subscription product. So for this video game situation, they're thinking a lot like Disney. Netflix wants to maximize the way the customers interact with their intellectual properties, and gaming is a great way to expand the IP that they currently own. Personally, I think including the video games in the subscription is an amazing thing. It's great because it gives Netflix the ability to raise prices on subscriptions to all their members because they're adding more value. They don't have to sell you on games in a separate subscription. They just have to sell you that they're a massive value as an entire service. So the more Netflix offers, the more consumers are going to be willing to pay for that subscription. As far as targeting as big of a reach as they can, they are expanding on these mobile-only plans. So they recently basically announced 78 additional countries across Southeast Asia and Sub-Sahara Africa to basically do these mobile plans that are much cheaper to basically get the brand to more consumers. I think it's a great way to expand the brand to parts of the world where a lot of these customers would not normally be able to pay for the current Netflix pricing, so this is a way to make it cheaper. A super important metric they go over is how low of a percentage of screen time in the US streaming currently is. It's only 27% of view time. This is far less than linear television. So linear television is 63% of US view time and streaming is only 27%. If we look at this chart, it shows you cable at 40%, broadcasting at 23%, making the 63% for linear, 9% on other, and streaming at 27%, broken down between all streamers, Netflix holding 7% of that market share. So there is huge opportunity in streaming still ahead. As always, Netflix competes with everyone for consumer eyes. They said that in the race to entertain consumers around the world, they continue to compete for screen time with a broad set of firms like YouTube, Epic Games, and TikTok, to name a few. So they've said this in the past that they consider companies like Epic Games, which makes Fortnite, more of a competitor than they do HBO, for example. They reiterated they expect to be free cash flow break even in 2021, that they won't need to raise external financing anymore. And this is a really great thing for the company because they're not going to dilute their shareholders. And they actually talk a lot about, which we'll get into, how they're going to get into buybacks. In Q2, they basically spent $500 million on buybacks. They purchased 1 million shares at about $500 a share, and they have a $5 billion share authorization for their buyback program. They basically went through 10% of that program in this quarter, so they are buying back stock rather than in the past selling shares to raise money. Since they no longer need to do that, they feel they'll be free cash flow neutral or positive, in my opinion, they might end up being. So they're buying back shares, which is an amazing thing. So my thoughts are that they had a solid quarter, that hitting Q3 guidance of an additional 3.5 million subs will be really important. And if they exceed that guidance and do more than 3.5 million subs, that will be very bullish in my opinion. I think Netflix and streaming in general is a multi-decade story that's unfolding. Cable broadcasting holds 63% of US view time and streaming only 27%. In my opinion, it's obvious those numbers are going to swap in the coming years. So I own Netflix. I believe they're going to continue to increase subscribers, increase revenue per subscriber, their ARPU, and this will lead to a lot of free cash flow in the future. The buybacks show that the company believes the stock is undervalued, hence they think it's the best place to put their excess cash. Now, if you have a very long-term view of 5+ years, we believe anyone with the long-term view of 5 or more years should own the stock. We believe Netflix is going to look like a steal under 600 a share down the road. The market cap today is $235 billion, and we believe streaming is a multi-trillion-dollar opportunity. We believe Netflix and Disney are going to be the winners of that market, and we hold both of them as top-rated picks. So some back of the napkin math. Many people question why we believe this to be a multi-trillion-dollar opportunity. Well, today, Netflix has 209 million subscribers. In 2030, we believe they'll have 500 million to 1 billion subscribers. We also believe that they could eventually charge as much as cable TV charges, which is $45 to $130. So assuming they eventually charge under that, $40 a month at that 500 million subscribers, that's an annual revenue of $240 billion. The budget to make a movie remains the same, regardless if you show it to one person or 500 million people. So the content cost, although it will increase as they make more content, it's going to remain stable at a certain point, leaving a lot of that revenue to drop to the bottom line. So basically, we have an annual revenue of $240 billion in 2030. Margins at that massive scale should be extremely high, and we're going to assume just a 30% net income margin. So basically, if 30% drops to the bottom line, we think it'll be much higher than that. But to be conservative, we're going to top out at 30%. That'd be $72 billion in net income. With a PE of 25, that's less than its tech peers, it would give Netflix a market cap of $1.8 trillion. So if you don't understand how this gets to a multi-trillion-dollar market, the math here should be pretty simple on it. We're assuming a $1.8 trillion market cap in 2030 with the assumptions of 500 million subscribers by then, paying $40 a month, which is less than cable TV costs, 30% of that net as net income dropping to the bottom line, a price to earnings of 25 in 2030, less than tech peers. Now, to go over how that equates to a share price, if we take $1.8 trillion market cap based on 443 million shares outstanding, that would imply a 2030 share price of $4,063. But the more impressive thing is Netflix is now doing buybacks, so their share count should be significantly less in 2030 than it is today. And that would make the share price even higher than the $4,063. Today, Netflix trades for $531 a share. So obviously, we believe this stock's a buy. We believe there's a clear path to that $4,000 share price, assuming they don't do any splits between now and 2030. Now, if you haven't liked this video yet, please smash the like button. It really helps the YouTube channel. Please subscribe if you haven't already and you like our content. Let us know in the comments what you think of Netflix if you're subscribed to Netflix. I'd love to hear how many subscribers you think Netflix will have in the year 2030. I read all your comments and I appreciate you all. Until next time.